The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Another excellent edition of the Power Trading Hour with your humble, lovable, squeezably soft host. That is me, David White, the koala bear of Wall Street. We need to get a koala bear in here, guys. All I've got is this bear. Let me get it. All I got is Mr. Bear here. We need more animals. We need more animals in the studio here. Of course, today I am coming from the world headquarters of TFNN. So I won't be accepting emails. Any emails you get, I probably won't look at till 7 o'clock tonight. So just make sure that you call in today at 877-927-6648 or that you post a message in the den. But emails verboten on Friday. So we take a look at a market that not moving that much. See if I changed. We're off half a point on the S&P cash. Probably the real news is the volume. We did go to a higher high today, and that's going to be on extremely light volume. My guess is we're going to see that volume tail out again. And actually saw maybe even a short-term high on Apple today. So we're going to look at that. But in fact, let's do this right now because it's off $3. And I think I saw it. Could take a look at it here. I just wanted to make sure what the high was. Annoying little pop-ups on this machine here. Yeah, 644.17 was the high today, and of course we're out here at 631.84. Pretty much all the euphoria of new products going through. I was talking to one of our tigers on the phone this morning, and he brought something up about Apple. I said, basically the problem I have with Apple is kind of an Orson Welles kind of problem. You know, you go out and you make Citizen Kane for your first big movie. Everything's pretty much downhill from there. And Apple's iPhones, what's the possibility of getting something that's going to have that kind of volume with that kind of margins again? Of course, they bought the worst headset maker in the world that had the highest margins. So maybe they'll make those headphones a little bit better. Maybe I'll even think about moving out my Bearer Dynamics or my Sennheisers, but I doubt it. But I think probably getting past a little bit of the euphoria of all this Beats and the upbeat talk, and rarely has Apple talked about any products coming down the road, but they seem to be more than willing to blab as much as they want about these, and my guess is that it is to satisfy the Wall Street gang and get them off his back for a little while, like Carl Icahn and some of those others. The question is, what will the reality be this fall when they release those products? The iPhone wasn't a $100 billion a year business right off the bat. I mean, they had the iPhone, the first one, and 3, 2, 4, all the different versions of it. But it took a little while to get that huge following. Probably by the time they were in version 3, that they'd really gained mass acceptance and probably the height of earnings in that product. Now it is a issue of, can you get everybody every 2 years when they change their contract to update and get the yet newer iPhone. So most of these product launches are logistically set up to happen when the big rollovers in AT&T contracts come up. And I just don't think they're going to get any more business. It may be able to at least keep as much as they can. Margins probably going to start slipping just a little bit on the iPhones. Certainly the iPads and that business fairly minor. Again, 30-35% margins just don't go very far when you compare them against the 65% margins to 69% margins that you get with the iPhone. It's going to be tough nonetheless. But as we look at Apple kind of doing a little reverse, I'm thinking that we do see the market start to pull back next week. And as a overview, but we'll keep an eye on it. Anyway, today is May 30th, and if you were picking up the Wall Street Journal today in 2000, you found that its headline read, "Too little trading deepens NASDAQ misery. The overhang of stock waiting to be sold limits any rally." Well, of course, that day, you printed in the morning, in the afternoon, the NASDAQ was up 8%. I don't think a lot of people that never lived through that dot-com bubble remember just how violent being short a stock was. I mean, basically you could make fortunes and lose fortunes in a day. The market was so violent. When we see a VIX of 11 or 12 like we see now, just almost ridiculous during those times to think about how just I think it was I think it was up in the 70s at one point. But I digress. Anyway, having its you don't put an article out and it instantly slams it in your face that day. But on that day, it rallied 254 points and was up almost 8% to end the day at 34.59.48. Everything's old is new again. We'll probably see that again one day. The disaster du jour today is Splunk. It had some decent numbers, but they were looking for some wild growth in this company that they did not get. Last time I looked at this, it was down $7. See what we have now. Down $8.61. We'll look at a chart of it. SPLK. My whole thing on Splunk is this is just more of the same of these recent IPOs, way overhyped. And the question is how many of these fail, and then we go into something like an Alibaba, and they can't get near the $200 billion value going out the door on that thing, just because so many of these stocks were oversold, overhyped, and pushed out to the public at incredibly high levels, which is the purpose of Wall Street, is to finance businesses. It's not to make you rich. But Splunk, kind of the typical template of the recent IPO that even had some decent earnings, but absolutely is getting shot for the long-term growth. Down to 17% as we speak, he said. Anyway, make sure you put something in the den if you'd like to look at it today. And I'd particularly appreciate phone calls at 877-927-6648. We'll look at the rest of the stocks here fairly quick. Oh, I think I've got Splunk up here. And then we're going to talk about some coal. We're going to talk about that black coal. Anyway, Splunk, just thought I'd give you the chart. This thing's going to blow away this 4107 low here. It did go to, what, 4105 already. Is it lower than that now? 41.44. So we've got that low. It's got higher volume, and you've got everything you need to blow out the bottom. My guess is you probably see this continue on down come a Monday. But this thing was $106 on February 28th and down to $41. And another one of these stocks, it was just almost impossible to get shares to short. But I think everybody knew this, and a handful of others were just ripe for the picking. But we shall see. Anyway, I wanted to talk about some coal, some black gold. That's oil, though, isn't it? Wanted to talk about coal. We talked a little bit about natural gas yesterday, and I just wanted to bring this up because I know fundamental reasons for natural gas moving are probably not as evident. You don't hear a lot of discussion about it. It is a political issue, and a lot of people believe that coal is evil, evil. But the EPA is going to be making a new carbon rule here. It was proposed last September, and this would be used to the existing Clean Air Act to establish a new source performance standard, NSPS, as the government loves acronyms. And this would be all about CO2 emissions. And that would be very interesting. But one of the problems is that there is not one coal-fired plant in America that would meet these regulations. So you've got kind of the immovable object meeting the immovable force, or the, what do they say on that? I'll have to mix my metaphors later. But they're talking about a whole cap and trade kind of market and market rigging policies. And even President Obama said have the potential to make electricity rates necessarily skyrocket. And one moment of candor out there. There is one plant that we even would think about making this level. It's a CCS-equipped plant in Kemper County, Mississippi. It got a $270 million grant from the Department of Energy to help, but its construction costs increased from an initial estimate of $2.4 billion to $5.5 billion. That's more than 4 times the cost of a new natural gas combined cycle power plant. This is probably what really is going to be coming out in the coming years. And this is some work that I saw out here today from Marlo Lewis, Ph.D., at the Competitive Enterprise Institute. But what you should be looking at is, and what will make natural gas really run here, are these combined cycle power plants. And what these things do is they generate heat, and there's a steam cycle that generates a turbine that powers a generator. But you can't get all the energy out in one cycle of all that heat, whether it's coal or natural gas. So they actually take that heated water and run it through yet another set of turbines. And they can get the efficiency up of these plants from about 34% to about 51%. I think you're going to probably hear a lot more about it. But to really make natural gas take off, you're probably going to have these new combined cycle plants. And if you're into natural gas, you're probably going to want to pay attention to this. The question is whether or not the EPA is just going to go ahead and have us all sitting around a bunch of sticks next winter, or if these things are not going to be kicked down the road like so many Obamacare edicts. But this is what we're going to be watching. The real reason is and comes on Monday, and we'll talk about that when we come back from the break. But there is a whole issue, and it's going to be addressed on Monday by the President. So we'll be back in a minute to talk about that.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we came back, I didn't get to get everything in that segment that I thought I would, but I did want to bring up that next week, President Obama is going to, on Monday, is going to unveil the EPA's 111 existing source rule in person. So if we are trading any of these natural gases, contracts or anything like that, expect some volatility. But what I do think is we're going to get an outline for at least the next 2 years of what the policy is going to be in the United States and why it's probably unconstitutional. I don't think anybody's going to say anything about it because they'd be called racist. But I think we can probably bet on a low in natural gas this summer, and that low will probably be the low for a lot of years to come. And what do we got to do? It's going to be a couple of years away from the next election, and next time that we'll have a new president that could change anything if they decide to. I don't have any problem with going to natural gas, but you're going to have pipelines to move that natural gas around the country, and of course they won't allow that either. So this is going to be a lot of confusion, but a lot of times there's a lot of profit in confusion, and just something to think about. But look for some of that on Monday when he comes back. It is a mad market, and we're going to go on and start looking at some charts here today. Anyway, we looked at Splunk, pretty much everything you would expect out of an IPO out here. As it breaks through $41, really the next level that this thing's probably going to be headed to is $26.10. That's the November 13th low of 2012. a very interesting company, and I could see how you could think that it'd be worth $106, but now 40. My guess is this is going to be a company you want to keep an eye on in about a year after it's consolidated down at these lows. It's got some great technology, like a lot of these IPOs. It just ran too far, too fast, and there was no way that the company was ever going to live to Wall Street's expectation of increasing growth. But not a loser, not a real bad company, and some very good core technology. But a lot of times these things far exceed it. They come back down and give us a second opportunity to get back into it. Of course, we've been talking about gold, and it's down $10 today. Could have been a lot worse. I think it was down a little bit more. We have silver off 31 cents. Platinum is off, what, $5-6 or something. And crude at 102.62. Don't see a lot of movement in that. And of course, what everybody's watching is how well the dollar index can hold this $80 level. It's off 16 cents today at $80.30. What I do see is does somebody having a note here in the den? I thought, that'd be interesting if it's true. I won't repeat it until I know it is true. But what we have is the foreign markets, or at least the third world markets, were fairly weak today. And I think that's the precursor to us having our first pullback of the summer, probably starting on Monday. We've been actually adding positions since Wednesday in both the Tech Insider and the path of least resistance, and we'll be looking at it. Anyway, got a lot of stocks here to look at today. Caterpillar, of course, the big one out here. This thing's rolled over, and if I put it on with my overlays, once this thing has rolled over on the 9-day simple moving average and or the displaced moving average, I'll do either one, but pretty much the same thing. We've got a pretty good sell signal on Caterpillar and a massive gap down here that I'm looking to get filled that runs from about $86, let's call it, to about $91.50. That gap happened with some decent volume back on the 27th of January, and it's hard for me to not believe you've had one day of really huge volume since this high volume low, which gapped up the next day. Well, it actually gapped up that day. So you've got that as support, and that's going to be at $91.29. But I think you're going to be able to get back into the gap down there at about 89.2. And as long as this stuff stays under the 9-day or the 3-day displaced moving average, pretty bearish signal for Caterpillar out here. And of course, probably some reasons in China to think that maybe the high is in, at least for a little while, on CAT. We will be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And welcome back, all. Looking at Chineri Energy Partners, LLC. Huge move out here today. I was trying to I guess you got lockup coming, and part of the issue here is something. June 11th on Chineri Energy Partners. I didn't see why it popped today. I was watching this for that whole issue. Maybe there's a reason. Not a lot of volume out here, but just know that come June 11th, we've got a lockup on that one. What else do we have out here? Wisdom Tree's Earnings Fund. Nothing in that. FCX. See if we get a little on that. I don't see a lot in that one either. My list here is pretty horrible. Coors. Nothing much in that. Let's go ahead and go to my scan, and that is on this one here. Let's go. We'll get some. Been watching Adobe here. I've had it in my newsletter last couple of mornings, just seeing it. Not surprisingly, it's starting to pull back. And again, we've got a lot of these stocks that are going to be right on the either 9-day or 3x3 displaced moving average over the next few days. Not a lot of volume so far in Adobe. But again, it won't take much for these to start closing under these different moving averages. Let's go to this traditional one. And yeah, you got maybe, what, $1 lower. This is, could close back under the 9-day and probably set up retracement down here to $57.15. But of course, what I'm really looking at is the template for this market on a lot of these stocks at highs. The April 24th high on Adobe was $65 even, 3.9 million shares. So what do we have on Adobe? 2.1 million shares, 2.2 million shares, 2 million shares yesterday, and we get to 1.2 million shares today. And again, we are pulling back. But I imagine that it's going to take a little bit of movement down before we start seeing some of these actually start bringing in some volume. Automated data processing, ADP, another one of these up close to its previous high on March 21st, $79.39 with 4.6 million shares that day, and we see basically getting back up into those levels today, and 1.3 million shares. Even yesterday, 1 million shares. The day before that, 1.2. So we've got not into this slightly lighter volume in a lot of these. We've gotten into incredibly vapor-like volume compared to a lot of the previous lows. Now, this is actually getting back into these candles that had two big candles on the downside. You had 1.4 million shares on the 23rd of January, and the next day you had 2.1 million shares, and we're basically back into the gap between those 2 days. And this is where you really need to start seeing some kind of volume. Peak D. Polar, can we look at the financials? XLF, BAC, JPM, very gappy. Which one did I look at this morning? I think I had it in the newsletter. Was COF. And this is the one that caught my eye between this one and a few others. But you have like Capital One in the financial sector. January 7th out here, $78.49, 5 million shares. What do we have the last 3 days for volume? 2.9 million shares. What do we have yesterday? 2.4. We got 1.3 today. A lot of these are pretty ripe for any kind of pullback to have major failures on them. Maybe somebody in the den. What's the Wells Fargo? Is it WCF? WFC maybe? Can't remember. Yeah, Wells Fargo. Another one of these financials up here on very, very light volume. This one's pushing the April 4th high at $50.49. Of course, you got into it with 13 million shares, but the last few days, 12.5, 13, and today, 7.4. So maybe you get 9 million shares by the end of the day. But we're at the point where we're about half the volume of that previous highs that we went back into. So that is going to be somewhat problematic. Thank you, Peak D. And Jody for putting in WFC. But let's look at some of the other ones. I haven't looked at BAC today. I think, we've got these ones coming back into the gaps and not a lot of volume, kind of going sideways like Bank of America. Of course, I think we've heard everything we need to out of some of these, like Bank of America. I don't think things are going to get any better for them short term. Now, if interest rates do go up in January, like we think, these companies could do a little bit better. But right now, probably going to be a tough summer for all of these. I don't see this thing breaking up any higher. Maybe you get back to 1550, but it doesn't look like there's going to be. I think they're going to fill probably a very small part of it, maybe 1550 on Bank of America. That's where I'd be looking at that thing topping out. Let's take a look at the broker-dealers there, JPM. And this is back into, that's Philip Morris. How about a JPM? Pretty much the same kind of chart that we saw in BAC, which is the huge move back down. It hasn't tested those lows. to really pull the trigger short on J.P. Morgan, which I probably would never. Again, I don't like shorting companies that have their own trading floor because they can manipulate their stock like nobody's business. But, if you could get 56.50 out of it and the volume remained low, but this may not even get it. All these financials look like they're just going to fall apart at any minute. And I've been kind of talking about that in my newsletter. I just don't think, I just think that there are even weaker stocks out here that I'm playing in there. But there's certainly no energy in these. And I think they led the market down last time, back in the pre-spring, late winter. And I think we're going to see the same thing. XLF. Now this is just, when you look at the select spiders out here, you just have basically a level where you've got everybody coming out of these stocks. But certainly the last 3 days on this, 2 dojis and a higher high with lighter volume today doesn't instill a great deal of energy or beliefs. But what you really have is this thing burning off this huge move down from April 4th to April 11th. You had all the volume come in. You had a high volume low, still untested in the XLF from April 11th. And it seems like to a fault, every one of these high volume lows has gotten tested, if it's in the ETFs or if it's actually in an actual equity. But I think you'd have to, if you were looking at any position out here or looking at the markets, you probably want that April 11th low to get tested on lighter volume than basically 79 million shares. But my guess is that's where, when this financial market starts rolling over, which I think it's going to on Monday, you've got a great deal going on out there. What else do we have out here? Okay, FDX, which is FedEx. Kind of interesting to see. Basically, they said their earnings were going to be poor next year. No one believes them, apparently. They pushed this stock up one more time to highs, and I think that was on a deal with the U.S. Post Office. Everybody's gotten all bullish lately. They haven't gotten bullish with one thing, and that is volume. And what we are against right now is the January 2nd, 2014 high, 3.3 million shares. In the last couple of days, we've gotten into it with 1.275 million shares yesterday, and today just 374,000. So not uncommon to see just how many of these stocks out here have come to these basically January 1st, 2nd highs where the market took off and failed again. But you want a close back below, what is that, the 144.39 to confirm a tops in it. You've got it on volume and you've got it on price, and you've got just the energy coming out over the last few legs. And this is how you make some fairly significant long-term highs out here, is keep bumping up here and having the energy fall out each time. But certainly nobody out here wanting to buy this prairie dogging company, and keep an eye on it. LinkedIn, been watching this one. I wanted to see how this thing came back into its gap. I know a lot of people wanted to short it. I thought this was going to hold up better than probably the rest, and it did not. So I was wrong on this one. But certainly the 165 to 170 range where that gap down is now set up probably a fairly decent trading range. So if you could get one more pop out of this thing, it may just fail right away. But you've got to look at this thing probably coming back down and finding support somewhere around 150 bucks. So probably better shorts out there. But this kind of looks like it's gotten all it can off the original automatic rally that came back into this long-term gap. Let's see if we can go back and find it. Basically, this is the prototype of a company that's had I'm trying to remember the guy's name. Maybe I'll find it during the break. He had a website, but he called it a poly-trend top. And the idea is if you drew a contact lens over the top, that's exactly what you were looking for to come back and fill these gaps up and get ready for the next big move. Anyway, LinkedIn, LNKD, is going after that gap. You've got huge volume, and that was the February 8th of 2013 gap up with 13.9 million shares. And you're probably going to see that gap come in and at least attacked a couple more times. But you'd like this thing to consolidate out and the volume become low. If it starts actually accelerating, you've got a problem. But right now it looks like that 130, 135 area should act as fairly decent support at LinkedIn. And you get light volume out there, you may have at least a temporary bottom if the market holds up. Oracle is another one of these companies having issues. And let's see what we have here. Okay. To me, this is a company that's been range bound for a while. Kind of interesting to see that it's got so much congestion over the last couple of weeks in trading. This thing did pop up with decent volume of 18.7 million shares on the 12th of May. But the problem as we close out this month is it's going up against 35 million shares that we saw back here on the 1st of April. So as we see these highs getting attacked, very light volume, sideways action out here, can we see a little gap out? You certainly can, but you want it within about 3 days, see volume come in. That's why I suspect that we're going to see the market turn down on Monday, and that is that we had our gap up and no follow-through. We're now through 3 days after that. We came into a Friday. We had every opportunity to have some volume the last few days and really carry this breakout to all-time highs, but you're just not getting it. On Oracle, I could see and guess from watching this intraday and the volume over the last 4 days as this thing winds down volume, that it really looks to me like distribution. Should be very careful if you've got a position in Oracle out here. I would be probably selling it or buying some kind of hedge off of it, like puts, if you wanted to keep it, because it looks one of the more dangerous ones out here that I see. The QQQs, as we speak about that, we've got about a minute left here, so I've got enough. Just wanted to take a look at the QQQs. Again, you wanted to see volume, you wanted to see it now. We want volume. When do we want it? We want it now. Anyway, $91.36, which is the March 7th high, 48 million shares. So what do we have in the last few days? 29.7 million shares, let's call it 30.5 million shares, 33 million shares, 19 million shares today, and we were pulling back again. Probably not a bad thing to start putting some of these over on the moving averages, so you can see where most people are going to say and call the end of these. But much under $91 on the QQQ. I'm going to call it $90.50. You really start getting into some real problems if this thing closes back below it. That would probably be an end to the trend. We'll be back in a minute. Give me a call, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back today, we're looking at the S&P up a little less than 2 points, 1.9 billion shares as we go into the last hour of the close. So what can we expect come Monday? And here's where I'm going to repeat myself a little bit from earlier today. That is just what is going to happen with the emerging markets come Monday. They looked weak today, and I have a feeling that they're ready to start pulling back yet a little bit more. And I think that's probably going to be our key Monday if this market is going to top out, and I think it is, over the next day or so. I could be wrong, but I've got a lot of stocks that are up against a wall. They're up against highs with incredibly light volume, and we decided to short those. I haven't shorted the indexes themselves yet, but in a good position, not sweating or in a losing position. So, in fact, we've even had a couple of our positions actually go up today, so in value, for us anyway. But we are betting on a little bit more volatility in the market to come through and start next week as we start the real summer. But this super light volume market out here, you certainly, if you're bullish, would want this market to pull back before the close, probably 5-10 points, and just have this very light volume up day out here. What you don't want to see is another couple of points higher, and 2.2 billion shares on the New York Stock Exchange consolidated tape, closing out a Friday of what's supposed to be a huge breakout. And I suspect we're probably going to pull back Monday or Tuesday, probably in that 1890 range. May take a couple of days. And at that point, we're going to see whether we can go back and break out that previous high of 1895, 1896 area. And if we break through there and we start seeing volume, that's really what we're going to be watching for that day. So anyway, a couple other stocks. I wanted to look at Yelp out here, and that's a lot of these stocks had an automatic rally off the huge move down. We're now back into those, and again, very light volume as we start looking at some of these, but they have started to bounce off the bottom and had a fairly decent amount of short squeeze or people getting out of these that were just probably too late to the party. In this case, we're looking at the May 1st high at 66.90, 66.69, had 22 million shares, basically got into that yesterday with 8.6 million shares, 6.5 million shares, little bit of a pullback here, but I think we're going to start seeing that that range right in here, about 67, 69, probably going to be a consolidation area at best, and at worst a setup to come back and test one more time this May 7th low at $49.11. But I just continue to see a lot of challenges for Yelp in the technology sector, most of them legal. Not that their product's so bad, but if you can't say something and you're going to get sued, and or a lot of the reviews are just negative, it becomes somewhat problematic when you can't trust whether the reviews are a competitor just trying to slam the product, or maybe just one hateful person with 20 IDs on Yelp, which is another problem out there, and a continuing issue. Anyway, as we go into the weekend, I'll be in the first hour of the Tom O'Brien Show. Hopefully you'll join us there. If not, of course, I'm always here each trading day, 2 to 3 Eastern Time, and 24/7 on Channel 14 on Tiger TV. So you can always catch me there. In the meantime, remember to sell when you can, not when you have to. And we'll see you Monday, if not, in the Tom O'Brien Show tonight. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.